For the last couple of years, the fintech world has felt, well, a little quiet, right? After that insane period of growth, everything kind of cooled down a lot. But lately, something's been shifting. You can feel it. There are whispers, there are some big moves being made, and there are a few signals that are so loud, you just can't ignore them. The next chapter is starting. And that leads to the big question on everyone's mind. Is the fintech winter finally over? Are we actually about to see a real comeback? Well, if you look closely at some of the biggest players in the space, the answer seems to be a pretty clear yes. The signs are definitely there, and they're really compelling. In fact, we've spotted three specific, super powerful signals coming from three totally different corners of the industry. Now, any one of these on its own would be interesting, but when you put them all together, wow, they paint this incredible picture of a sector that isn't just waking up, it's hitting the gas with a whole new strategy. So how do we know this is for real? We're going to break it down by looking at the three core pillars of the industry: commerce, wealth, and banking. And in each one, a major player is making a move that tells us something much, much bigger is happening. So let's dive in, starting with commerce. Okay, our first signal comes from Shopify. I mean, they're practically the definition of e-commerce. But what they managed to pull off recently, it wasn't just another big sales weekend. No, this was something else. This was a fundamental change in who they are as a company. So what did they do? Just look at this number. Over the Black Friday Cyber Monday weekend, Shopify merchants processed a mind-blowing $14.6 billion. At its peak, that was $5.1 million a minute. Think about that. But as absolutely massive as that number is, it's not even the real story here. Exactly. The real story isn't just the number, it's how they got there. It's the quality of that growth that signals this massive evolution for the company. This wasn't just business as usual turned up to 11. So let's break it down. First, they are moving up market. This growth is being driven by huge enterprise-level clients, not just the small mom-and-pop shops. Second, they built an incredible amount of trust. The platform handled all that insane traffic without a single hiccup, which, let me tell you, is a huge competitive advantage. And finally, their Shop app is becoming a powerhouse. With over 81 million buyers using it, Shopify is now a place you go to discover new things, not just a tool you use to pay for them. And this quote just captures it perfectly. What we saw was Shopify graduating. They've gone from being a simple toolkit for small businesses to a full-stack, enterprise-grade operating system for all of commerce. It's like they've unlocked a whole new level of the game. All right, let's move on to our second pillar and see how this theme continues: wealth. The signal here comes from Wealthfront, one of the pioneers of automated investing. And they just made a move that absolutely screams confidence in what has been a very, very shaky market. They confidentially filed an S-1, which is the very first step to going public. Now, this is a huge deal. Why? Because the IPO market for consumer fintech has been completely frozen solid for years. Wealthfront is the first one brave enough to test the waters, and they're making a massive bet that their model is built to last. And to really get why this matters, you have to understand just how different Wealthfront is from its flashier competitors. While all the neobrokers were focused on the hype, the active trading, the gamified experience, Wealthfront was always playing the long game. They're all about automation, responsible money management. It's just a totally different philosophy. This analogy just nails it, doesn't it? The trading apps were the loud club bangers of the last few years. Super exciting for a moment, but maybe not sustainable. Wealthfront? They're like vinyl jazz. It's quieter, it's more deliberate, and it's built on a foundation that's meant to endure, focused on steady, automated growth instead of a trading frenzy. And here is all the proof you need that this model has come of age. You have massive institutional investors, we're talking firms like BlackRock, circling this IPO. When the so-called smart money shows up in force like this, it is a powerful, powerful signal that automated wealth management has officially gone from a niche idea to a mainstream, institutionally backed powerhouse. Okay, and that brings us to our third and final pillar: banking. In this corner, we've got SoFi. They recently made a move that on the surface might look like a simple little feature update, but is actually a landmark moment for the entire industry, a real convergence of old-school finance and new-world digital assets. SoFi started letting its users trade crypto. Now, you might be thinking, so what? Lots of apps do that. But here's the absolute game changer. SoFi is a fully regulated U.S. national bank. For years, traditional banks have kept crypto at more than an arm's length. SoFi just invited it right inside the front door. This is a huge milestone. And this move fits perfectly into their whole strategy. SoFi's entire game plan is to be the one and only app you need for your entire financial life. You can spend, save, invest, borrow, and now you can deal in digital assets. It makes their ecosystem that much stickier and gives you one less reason to ever leave their app. And make no mistake, this is incredibly strategic. For one, it closes a major competitive gap with crypto-native apps like Coinbase and Cash App. It also serves their core audience, the 25 to 40-year-old demographic, who basically expect crypto access at this point. And maybe most importantly, it builds a bridge to the future of finance, to things like stablecoins and crypto-backed lending built on new Web3 infrastructure. This quote just perfectly sums up SoFi's unique position here. They want to be the trusted, regulated bank where your crypto sits right next to your checking account. It's the innovative energy of a crypto exchange, but with the compliance and regulation of a major bank. And that combination, it could be a total game changer. Okay, so let's zoom out and bring this all together. We've looked at three very different companies in three very different parts of the industry, making three very different moves. But when you step back and look at them all at once, a really clear picture of the new fintech playbook starts to emerge. So let's just recap. You've got Shopify and Commerce leveling up to become this massive enterprise-grade operating system. You've got Wealthfront over in Wealth, proving that its mature, automation-first model is ready for the public markets. And then you have SoFi in banking, building a regulated mainstream bridge to digital assets. Each one is a crystal-clear signal that the engine of fintech is starting to roar back to life. So yeah, fintech's quiet period really does seem to be ending. But here's the thing. We're not just going back to the old ways. The new playbook is all about maturity, real scalability, and smart integration, not just hype. It's a whole new game, and the big question these signals leave us with is, who else is ready to play?